Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of December 2nd, 2024. Wow, we're up big this year and we've got 1 month left. So we're going to touch on where we are in the S&P 500 year to date, what it looks like moving forward the end of this year and into next year. We'll talk about the different sectors, how they performed, what it looks like moving forward. We'll touch on the economic data that is coming out this week, and then we will jump into the live trades on the option trading platform. Before we get started, go ahead and hit that like and subscribe button down below. Let's get this video out to as many people as possible and get at least 100 likes. Also, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. All right, guys, here's a chart on TradingView from last week, and we were up about 1% last week. And year to date, we are up about 26% now year to date. So up big this year. We started the year at 47.43, and we are now at 6,032 over here on the S&P 500, the SPX. The different sectors last week, everything was up except energy was down 1.79%, but everything else was up pretty good last week. And then again, year to date, you can see everything is absolutely screaming. Utilities up 30%, communication services 35%. As far as economic data that we've got coming out next week, we've got the unemployment numbers on Friday, and on Thursday we've got some jobless claims. And then if we look at last week, we had PCE, core PCE come out. It was 0.2 as expected, and 0.3 the core PCE as expected. So everything was good last week, and that's why we were up. No real bad news at all. Jobless claims came in as expected. 215,000 was expected. It came in at 213,000. So don't know how you can get any closer than that. As far as interest rates, there is still for December 18th. Last week there was, I believe, about a 52% chance of the quarter point cut, but now there's a 66% chance of a quarter point cut in December, and then ongoing cuts through next year. So that looks good, and that should be good for the market as long as that happens. However, take a look here, guys. The fear and greed index now is up at 66, so it's risen quite a bit from the prior week. I think we were neutral. We were at 51 in the neutral range, and now we're at 66. So everybody's getting a little excited. So, I'm actually kind of looking for a pullback here coming soon, but we'll see. By the way, if you'd like to receive the free options trading guide that outlines all the different strategies and how to manage them effectively, comment options guide down below and I'll send you the link. So let's jump into the trades. We don't want to be too long, too much invested at this point. So I'm looking to stay more neutral or have some bearish, some call spreads and some negative delta on to capture that one if there is a pullback. Oil. We're doing pretty well in oil. I think in the last 30 days, we've made $288. And the way that we've been trading oil, if we look at the chart, this is the 1 year on top daily, and then the RSI, the strength, relative strength index. We're right about in the middle, a little bit down. But when we get down to this 70 range, I throw on some put spreads, and that's what I've done here. I've got 3 tranches now. The 64.63, the 67.66. We've got $561 left in extrinsic to collect. We've already collected 318. If we look at the curve mode, you can see I'm in that profit zone right now at 68. We just needed to stay above this 67 in the next 15 days, and we collect another $561. So anytime, any big move down, I like to throw on put spreads. I use spreads in oil just because oil can go crazy. I don't see a big risk to the downside, but if we go, if a war breaks out and, we've already got some things going on, but if anything gets worse, oil can really spike. So that's why I don't like to go naked on futures because they are so leveraged. Let me know in the comments if you're trading oil futures and how you're doing it as well. I'm curious to hear. AMD is one of the best AI chip stocks right now, and it has been beaten up, but we've been doing pretty well. Just in the last 30 days, I know we've made quite a killing. Yeah, $1,229 in the last 30 days just trading put credit spreads in AMD. And I threw on this last week a leaps option 229 days out. So I'm not going quite, I went like 9 months out, not quite as far. Usually I go 1 to 2 years, but I'm kind of testing this, and I was going to sell weeklies against it. But, you know, I noticed I sold the regular monthly, the 146 call against it. But we've got that going. We've got 2 put spreads on, and we're at 137. So we're doing really well in AMD right now. Avago is another chip stock. And my target for AMD is much higher than where it's at right now. It's up in the, you know, $200, 190, 200, and we're at 137. So there's big upside. And you can see on that chart, we're down on the RSI. Anytime we get down here, I'd like to be long, especially look, it's right around, it's been going around the 200-day moving average is the yellow, the 13-day moving average is the green, and the red is the 50-day. So, you know, I see AMD taking off here soon. No earnings coming up just yet. Avago is another chip stock. We've got the 160, 150 put credit spread on, and you can see where it's trading. RSI is down, so I like to be long Avago, which is Broadcom, and we've done pretty well. Last 30 days, 140 bucks. But I like Avago right here. Coin is another one. With the new administration coming in, they are proponents of crypto, so it's been doing well. I've kind of shied away from the call side at this point, but I'm long at 270 on Coinbase, but it's way up. You can see top of the RSI and way up here above the 200-day moving average. So got to be careful here. But it is high volatility, and Coinbase can really move just like crypto. And DraftKings, we've been doing poor man's covered calls and selling calls against them, and it's been doing really well. I know over the last year we've made over $4,000, 4133 over the last year, just trading these poor man's covered calls. I've got 2 tranches on right now. IVR is low, so good time to buy a leaps. I don't know if I would sell the call against it right now, although looking at the chart, it is up, so it doesn't hurt to sell the call either, but a good time to put on a poor man's covered call if you're thinking about it. And DraftKings has been, you know, it's been doing really well for us over the last year. ELF is another one, great fundamentals with ELF. If we look at the financials, annual, this is a Tasty Trade platform. There's a link down below. Check it out. I also use Moomoo. There's links to both, and there's some benefits. So if you're not using either one of those, I would definitely check them out and go through my links. There's some benefits to that. But you can see right here the revenue and net income, very positive, moving up. The balance sheet is very positive, moving up as well, with assets and liabilities, and super strong stock. And it's kind of been down. So I'm looking, my target for ELF is way up there, lots of room to move as well. They're based in the US, and they manufacture, or they provide makeup, but they use manufacturing in China. So you can buy great makeup for much less cost, and that's really what they do. But my target for ELF, based on the fundamentals, is like 200. And they'll do well in any market because makeup is going to be used. Gold is another one. It's been trading in a range, and we're right in the middle of that. If you look here at curve mode on the platform, that's what I really like about this platform as well, is you can really visually see, if you're a visual person and you like to see the chart, all of this is profit range based on what I've got. These are the put spreads, these are the call spreads, but iron condors, and we've been trading in a range. We're at the upper end of that range right now, above the 200-day moving average, but right in the middle of the RSI. Good IVR, IV ranks. So I like the iron condors right now. We've still got 289 left in extrinsic and 402 made so far on these particular two iron condors. So doing really well there. And Home Depot's the next one. I think we've got some iron. We've got an iron condor. We're moving up. IVR dropped, so we've still got quite a bit of extrinsic 276 left, but we're right in the middle of that range with Home Depot, and it's at the top end. But it's a play on housing, and I don't have anything else on right now in housing. IWM, the Russell 232.45. We're in that trading range. We're in the profit zone. I like that, and it has moved up quite a bit. So I do look for a little bit of a pullback, which will hopefully pull back right here into the middle, and we'll end up that way at the end in 19 days, and we'll collect another $375 in extrinsic. Wow, I might throw another similar trade on just because there's so much extrinsic right there. Let's see if this doesn't allow me to duplicate it there. But 232.45. So I'm going to look at doing that, I think. So what I'm going to do, I'll throw that trade on right now. We'll do a iron condor, and let's see. We'll go out here. I can just go right over where I had my strikes, and it's going to pay pretty well. Actually, I'm going to move up. Wow. 250, 255. So on the call side, we can go 250, 260, and then 230, 220, and collect 264. It's a little less than a third the width, but I don't mind that. With 19 days left and way out there, there could be a pullback, but actually, what if we do? Wow, I could go $5 wide on the put side and 228 versus 264. That's hardly anything for $5 less. I'm going to put that in. I'm going to put it in above the market and good for canceled. But I'll put this on tomorrow morning, Monday. I'm making this video on Sunday. But 328, review and send, and boom. So I've got that order in the queue, and then I'll just adjust it when the market opens. All right, L3 Harris, 54 IVR, and the price is 246. L3 Harris has been doing really well for us. Let's see. Oh, I think we've made over the last year, we've made like 1,400 bucks. But it's been pretty good. It's up quite a bit right now. It's a great defense company, but actually no, it's kind of trading in a range, and I'm long the 240. We're still in that profit range right here, so we're looking good in L3. Lockheed Martin LMT, this one's down. So I've got a call spread and two put spreads, 529. I do like it quite a bit higher, but you can see it's at the bottom of the RSI. But great defense stock as well. And with the current administration, it should do well going forward. And my target for Lockheed Martin's like 570. Micron way down, 97, great chip stock. And here's the RSI down, everything's down. But Micron is going to do well. We need storage, and they manufacture memory and SSD storage. And there's so much data with AI that Micron's going to continue to do well. It's one of my favorite AI plays, and the target price there is 161. They've got great fundamentals, so I'm definitely long. I've got 3 tranches of put spreads right now on in Micron. And if we move on, the next one is NVIDIA, same situation, 138, 11 IVR. We've got the put credit spread, so we're in that profit zone right now. It's fairly priced, I think, NVIDIA. So I think it's a good buy right now. And we've done well just in the last 30 days in NVIDIA. I think we've made $781. I've bought some of my put spreads back, but it's been doing really well. Let's move over here. The Qs, we've got 19 days left. We're right in the middle of the range, 509 on our iron condor. You can see that. And the Qs is up quite a bit, but hey, moving strong, trading in a range. I've just got one tranche on there of Qs, and we've made quite a bit of profit, and there's not that much extrinsic. So I will probably just close this out. I'm going to close it out for less than this so that I know, and then I'm going to put good till canceled, and then I'll know to close that out tomorrow. Did I put good till canceled on my other one? I think I did. What was the other one? IWM. Yeah, good till canceled. Got it. Okay, so that's the Qs. SoFi. We killed it on SoFi. I'm out of everything because of the big move up. Look at that big move, parabolic move up and way above the RSI. So I just can't buy it back in at this stage. I'm waiting for a pullback. It may or may not ever come, but SoFi, if you look at the last 30 days when I closed everything out, we made $4,500 just in the last 30 days in SoFi with what I had on. I had several leaps options on, so did really well in that. Ulta 345. We've got two put credit spreads. 386. It did move up. We've made 280 on these trades. We've got 383 left to go in Ulta, and you can see it did have a little bit of a move up, but it's still fairly priced with the RSI, and it's below the 200-day moving average. But this is a Buffett stock. He likes Ulta. It's makeup beauty again, so similar to Elf, but these guys are bigger. Yeah, that's we're profitable if we go. We're on the curve mode on the Tasty Trade platform analysis, and then you can see we're profitable all the way down here to the short strike and below the short strike because we've collected that premium, and we've done pretty well in Ulta year to date, and it's been a good stock for us. In the last 30 days, I think we've made quite a bit as well. Yeah, $679 just in the last 30 days in Ulta. So I like Ulta long right now. I don't have any calls on 68 IVR. They've got earnings coming up on 12/5, so I'll probably leave it on through earnings and then just try to capture the rest of that. And if for some reason it drops, then I'll just roll these out, maybe throw in another tranche, but depending on the reason, we'll see. But I think they hopefully will beat earnings, and it'll keep moving up. Upstart is another one. This is a new trade. I've got this. Just put it on. I'm going to be doing a video on this, covering it, but it's an AI play, and yeah, it's just new trade, so I'm not going to talk too much about it, and I'll have a video coming out. Viasat is another one I'm going to make a video on. It's a stock I'm looking at to buy a leaps option this next week. So I think Viasat's got huge potential. X is one we did a video on. We've got some strangles, some iron condors on, and they are being acquired. It looks like it's still in limbo, but Nippon acquisition, which I think the current administration and the new administration are both against, so that can affect the price. But if you look at the huge range and profit range, that's why I put these on. But you know, I'm a little bit concerned because the IV ranks so high, so it can move so much. But we're profitable. $10 lower and $10 higher is our break even. So from 30 to 50, and if you look at that chart, it's been trading in that range. But again, we've got this big deal coming up now. But 50 takes us all the way. If I were to move that up here, and then on the 30, right here, these are my break evens. So it's a huge range. So, you know, even if it's approved or disapproved, you know, hopefully it doesn't move too far out of that range. But and if nothing happens in the next 19 days, all this premium is going to come in, and that decision's been delayed for quite a while. Last one, ExxonMobil. I don't have a whole lot. The only thing I have on in oil is crude, and here it is right here. And ExxonMobil is the other one. We've that I'm trading in energy, and it's been doing really well. It's at 118, right between my short strikes on my iron condor, so we're in that profit range, and we've done pretty well in Exxon, over the last year, and even in just the last 30 days, we've made 300 bucks. All right, guys, that's a wrap. I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Ask a question, leave a comment. I answer every single question. Thanks for watching. I'll see you in the next video.